Good evening, Mohanty sir. Very good evening.
Yes, sir. Good evening. Very good evening.
Good evening, sir.
Good evening, sir. Good evening. Biju, please make Mohanty sir co-host. Okay.
Done, sir. Done, sir. Good evening, Mohanty sir. Good evening, Mohan sir.
Yeah, very good evening.
Sir, we have almost 300 plus members, near to 500 actually. We are seeing the participation.
So anyway, this will be a huge, big crowd. Sir, I have scheduled one meeting at 8 o'clock for JIB candidates. So I will take only 1 minute. Then I will move
sure.
exactly at 8 o'clock.
No issue, sir. You should be there.
This being a very important session as far as the exam is concerned. So I will start at 19:59.
Okay.
JIB candidates now Saturday is the exam. So I am giving them exam some important points they have to bear in mind when they are going to the examination center. One thing, then second thing, what are the different patterns of questions? Normally JIB there are 3 patterns. So some examples are also taken, and also some technique to get the answer for which actually they don't have any idea. Some clues, some tips. So sometimes they may work out, because now see out of 120 questions, they are not there to score 100 out of 100. So definitely 25 to 30 questions, definitely they may not be having any idea at all. So our mindset should be like that. Now we should be in a position to leave that questions without looking at that immediately. Otherwise, now if you are taking that into brain, then mind, then it will disturb you, and your confidence level also will come down. So that I will be taking the class at 8 o'clock. So now it is 8 o'clock. Good evening, very good evening, Mohanty sir. Very good evening, Biju. Very good evening, all the participants.
Good evening, sir.
So very important days are ahead of for you. Only 18 days remaining for your examination. And today we are commencing all the 5. We are not taking class for central banking. Other retail banking, rural bank, risk management, HR management, IT classes are beginning today. So Biju is having a very busy day today. Nearly 5 sessions and also crash course is going on. So good work by Biju. So as far as this class is concerned, it's very important, because see, this is the paper which helped a lot of candidates earlier to clear CAIB. Those who scored between 45 and 50, that is above 45 and above, but below 50, the shortfall normally is covered. The retail banking coming to the rescue of all of them to cover up or make up the shortfall. So that kind of importance is there for this retail banking class and retail banking examination, and it is very easy for all of you to score mark for that also. So as Biju told now, that number may go up. So my humble request to all of you is that you attend, don't unmute your mic during the class session, so the flow will be there, and you can note down. You write, you sit with a pen and book, and you note down wherever you want to ask something, and at the end I think you sir will be giving the time. So you will be explaining to when you can ask the questions. So strictly adhere to that one. And so the give due importance to this class, because this class, this retail banking paper will be helping you to clear CAIB. That is what we have seen for the past several years. So with these words, I am welcoming Rajendra Mohanty sir. He is a very senior faculty for IBS. He was an ex-banker having vast experience, banking experience, and also is a very good knowledge level, and also he was a trainer for other institutions or banks also. So he will be handling this retail banking for you. Most of you must have attended his class for risk management and balance sheet management also. So this is very important. He's a chief manager, former chief manager from Central Bank of India. So please listen to him. Sir, on behalf
Yeah,
of
yeah.
all the participants, IBS and myself and all our backend staff, especially Biju, warmly welcome you. And now it is over to you. As I told you, I am leaving the class because I have
Yes,
to
yes.
join the other
No,
class.
no,
Thank you, sir.
yes, sir. Yeah, please go ahead, sir. Thank you very much. Thanks a lot for the introduction. Thank you, sir. Thank you. So very good evening, friends. So we'll be starting this retail banking.
Good evening,
Yeah.
sir.
So maybe as per Biju's, I think that more than 200, 300 people will be there. So first and foremost request to all of you that the background noise should not come into this session so that it will be disturbing the entire class. So I request all of you to take care of that, because if the flow is broken in between due to background noises, then definitely at the end of the entire whatever the allotted sessions are there, some things will be missing out. So missing of a 1 minute or 2 minute also is very, very crucial. So please ensure that your mics are always in mute position. Whenever you require to ask anything, you please unmute and ask, then again mute it. So that will be nice of you. Okay. Otherwise, the flow will be broken and definitely some parts of session will be missing out at the end of it. Okay. So, as Mohan sir told that this retail banking subject is elective paper, which is quite easy to score more marks than your BFM or ABM. So those people who normally score more than 45 but less than 50, normally we have seen for the last so many years, 5-6 years, that they score around say 60 marks in retail banking, which helps them to pass the entire CAIIB with the aggregate marks of 150. So it is very easier to, because you are very much acquainted with almost all the things in retail banking. So it is not a hard subject like risk management or balance sheet management or treasury management or anything else. So it will be easier. Just you have to go through the classes as well as read the study materials or the book. That's all. Nothing is so. We'll be starting right now so that as far as possible within the time schedule, whatever is given, we'll complete it. And at the end, 1 day is given where 3 hours will be assigned for doing some numericals. Numericals of retail banking is also important because numericals are sure short thing to get the full marks. So you can easily attempt those things and it will help you to score minimum 60. So last day, 19th of this month, we have 2 sessions in the morning as well as in the evening. So 1.5 hour, 1.5 hour, whatever possibility around, whatever things numericals will be there, I'll be discussing those things to you, which will be helping. Okay, so we'll start. So first thing is about retail banking. So what is retail banking? We should know. We know that what is retail banking we are doing in the banks, everybody is doing. So what is this retail banking? What is the meaning of retail? Retail means what? So first we understand what is the meaning of retail, then we can understand what is this. So retail meaning is the sale of any goods or services to the public. So it is about the sale of goods or services to public in relatively small quantities. So basically it is about the sale of goods or services. Normally we are talking about goods or services. Okay. Sale of goods or services to the public, general public, somebody is selling in relatively small quantities. So quantities are small. It is about small quantities, not a big quantity. And definitely another aspect here, it is for the use. It is for the use or consumption. Use or consumption of that individual. Use or consumption of that individual and not for resale. Not for resale. Means he is not doing it for further commercialization. It is for its own use. So basically we can call that these things not for resale means we have known that this talks about the consumer. So basically, retail banking is pointing at the consumer aspect of banking. Okay, so this thing is retail banking. So we can say that this type of retail products or services in the bank, which is offered to the public in a very small quantities. Small quantity means whatever the products are there. Say if you take into account the loans, then the quantum of loan will be in a small quantity. It is not a big loan. Corporate loans or any business loans are normally bigger loans, 50 crore, 100 crore, 1,000 crores. It is not about that. It is about small loans. It may be 20,000, it might be 20 lakh, it might go to 2 crore or up to 5 crore it can go. But it is never more than that. So that is about the retail banking. So, and as I told, this is totally focused towards the individual customer, a single customer. So we can say that retail banking is geared primarily towards the individual customers. When the products and services are sold to individual customers, we call it retail banking. Okay. So it is unlike the wholesale banking. There is wholesale banking. You can call that wholesale banking. Wholesale banking and retail banking. There are two aspects. Wholesale banking, say we can say that if you go to the market, we can say that there are retailers who are selling goods and there are wholesalers also, they are selling goods. Basically, wholesalers are selling the goods to the retailers so that they sell in bigger quantity to the retailers, and retailer take these bigger quantities, they then sell it to the individual customers. So retail banking is just opposite of wholesale banking. So wholesale banking focuses on the retail market, means it's a bigger thing, but retail banking focuses on the consumer market. So unlike wholesale banking, the retail banking focuses primarily on the consumer market, totally delivered consumer market, which we can say that it is a mass market. Mass market in the sense it is for a bigger population. It is a larger population, not a smaller population or a smaller group of people. It is about a huge population of people. So focuses on the mass market. Retail banking focuses on the mass market segment, covering a large population of individuals. So large population, basically individuals. We are talking about individuals. Okay. So this is another aspect. And retail banking also offers both things. So in bank, we have different kinds of product. We have liability side products. We have also asset side product. Both products are there. So retail banking constitutes both the types of products. It can be contingent liability product also. It is also possible that somebody wants a bank guarantee individual. So bank guarantee can be also given. So basically it can be a liability product. It can be asset product. It can be a contingent liability product also. So retail banking nowadays, banks are offering both liability side, asset side, as well as a balance sheet or contingent liability side product also. Earlier, prior to 2000, before year 2000, if you go further down, 1970s, 80s, 90s, late 90s, at that point of time, retail banking means that time retail banking was there, existence of retail banking was there, but it was only limited to liability side. Liability side, when people were coming and they're depositing their surplus money, they were only making deposits. So we can say that banks were previously offering only liability side product as far as retail banking is concerned. So in those periods, no asset side product, or you can say contingent liability products were not offered to the retail people or customers. Because why it was not offered? Only simple, the reason was that there was no demand at all. Because unless a demand is there, why should someone sell it? There has to be a demand. Demand means unless it is required, nobody is going to demand it. So at those times, it was not a required or needed thing for any individual. So there was no demand. As such, no asset or the contingent liability products were offered by the banks to the people. Only liability side banking was there. But now you see that both liability side, asset side, and contingent liability side products are there, which is provided to the bank. Apart from that, we can say that nowadays banks are focusing on the personal banking products. Personal banking products means wide range of personally made products are offered to different types of people, because there is large population. In India, we have a very large population, and out of the entire population, we can say that around 40 to 50% people are into the banking. They have accounts in the bank. So their needs are there, and their needs are different from each other. So for that purpose, bank has to innovate or design personal banking products to such people. So banks are offering now wide range of personal banking products under retail banking. Okay, and all these products, when it is offered to them, nowadays, due to technology, since technology is there, so we can say that both the delivery of those goods and the products and services to individual customers are happening in physical model as well as virtual model also. Physical model means what? One-to-one, face-to-face. Face-to-face means customer is coming to the bank and he is talking to the bank employees and getting his product or getting his services. So face-to-face means physically. Physical presence of the customer as well as banker is there. They are mutually making some deal, and finally the thing is provided by the bank. Whereas virtual means this face-to-face thing is not there. Now, due to technology, the customer did not come to the bank. Customer can get the service, can get any product of the bank just by sitting at home or anywhere else through accessing the products of the bank through the internet. So basically, internet has made it possible that in virtual mode also delivery of banking products is possible. And now more and more people who are quite acquainted with this technology or internet, they prefer this virtual delivery model than this physical model. So we can say that the retail banking products are also offered in physical as well as virtual model of banking delivery models. Okay, and now, as I told you that there are so many large customers bases, 40 crore or 50 crore or more than 70 crores people are there who are into banking. They have their account in the bank. Their need is there. So to serve them, different types of products are offered by the banks. So we have multiple products in the retail banking. We have multiple customer segments because customers are not uniform in size or shape or say their age, their income. So multiple customer segments are there, and definitely multiple distribution channels are there, which constitute this physical as virtual. So we have multiple distribution channel. Branch is one channel, which is a physical channel. We have ATMs are there. We have net banking is there. We have mobile banking is there. So different types of channels are there through which this retail banking as well as other banking facilities are also provided. But some of the corporate banking services are not provided through mobile banking or net banking. For that, the corporate should come to the branch. Physical mode is normally necessary. But retail banking can be provided only through virtual delivery model also. Okay, because multiple products means nowadays individual, when you are talking about retail banking, individual customer means it is not about only personal, not only personal, maybe some individual who might be a proprietor of the concern. So for him, we will consider that he is also an individual. He is not a partnership. It's not a partnership firm or a company or any other say organization or like that thing. So proprietorship also can be treated as individual. So for them also, bank also provides the services like some small businesses or medium-sized businesses might be there, which are controlled by these proprietors. So whenever such services or products are offered under small businesses and medium businesses also, they are under retail banking. Okay, so we can say that there are multiple products are there, like your deposits are there, your loans are there, your credit card is there, you are selling insurance, you are selling investment securities, you are selling mutual fund. So banks are selling into a lot of things. And customer segment, as I told you, individual customers as well as some small businesses and small, little bit medium size business. We can call them small corporate also. Okay, and as I told you, multiple distribution channel, branches are there, call centers are there, internet kiosks are there, internet banking is there, and banking through smartphones are there. So different channels are also available thanks to the technology where this retail banking can be offered. So we can say what is the best characteristic of retail banking? Through retail banking, banks are offering multiple products to multiple customer segment through multiple distribution channel. It is possible only possible that it is retail banking. Corporate banking is not possible in this way. Okay, so we can say that we can differentiate what is the difference between retail banking and investment banking or commercial banking or wholesale banking. So investment banking means a particular segment of people are normally contacted for say we can say that their wealth. So we can say that this is a wealth management type thing. Means group of people who are rich people or say more abundant people are there. They have a lot of money and they don't have time to make their investment. In such cases, the banks are taking care of their wealth management or their investment portfolios are handled by the bank. So it pertains to a very small group of people. It is not like a large population. So investment banking, commercial banking, basically we can say that this is corporate banking or wholesale banking. So these three are totally different from retail banking. So by far you can understand what is retail banking. So I can say that retail banking at a present context, in the present context in 2022 or for the last so many years, I can say that it is the result of the fast-paced lifestyle, the lifestyle of the people. The lifestyle of people have changed drastically during the past decade. So it can be retail banking is, we can say that the growth of retail banking in India is due to the fast-paced lifestyle plus the technological growth which has happened in our country. So these two things has happened simultaneously in the economy. Because of this, the people, they are demanding different types of products from or services from the bank. So this fast-paced lifestyle as well as technical growth which is happening in the economy, it demands innovative contemporary products and services from the banks. And to cater to the need, bank has been providing multiple products to multiple customer segments through multiple distribution channels. So that is what the retail banking is. Okay, so this is about the background or definition of retail banking. Now we say that, as I told you earlier, retail banking was not there. Now, retail banking is the main aspect of any banking industry, in the banking industry, any bank, any of the bank, you see almost around say 30 to 40% of their total turnover is towards retail banking only. So we can say that what actually has pushed this retail banking to such stage. So before that, we should know what are the advantages of retail banking and what are the disadvantages of the retail banking. Then we can come to the fact that what are the real thing which pushed the retail banking to such a stage now. It is not only in India, it is throughout the world it is happening. So we'll first talk about the advantages. What is the advantages in retail banking? So first advantage is that we have retail banking is catering to the large base of population, or we can say that a bank is having very large client base or very large customer base. So customer base of a bank is very large. Even a small bank must be having at least 1 crore of customers with them. So a bigger bank like State Bank of India definitely must be having more than 20 crores of customers, individual customer who have opened their account in the bank. So because of this large client base, so different clients are there. So all the people are of different, say we can say different as a type of people with different income, different age, different types of business, so many different type of say job they are doing. So entire thing is totally, so we can say it is different, totally different. It is not homogeneous, it is totally heterogeneous. So for that reason, we can say that if we offer them our lending products, retail lending products or loans, so in that case, the risk of lending is spread. It is not concentrated. It is spread throughout the entire customer base. Because see, normally what happens, I'll just give you an example. Suppose we think about corporate banking. Corporate banking, suppose a small bank is having a corporate customers, say they have a corporate customer base of say 2,000 corporate customers are there. And vis-a-vis, they might have 2 crores of retail customers. So 2,000 corporate customers, but 2 crores of retail customers. Now, these 2,000 of corporate customers, so average loan amount which might be the bank might be giving to the corporate might be, say, we can say it might be 10 lakh average. Average might be 10 lakh or it might be more than that. Say we can say 50 lakh. Say average per corporate bank is offering 50 lakh loan. Okay, so to somebody bank might be giving 10 lakh, somebody bank might be giving 100 crores, some crore, or some corporate might have given 500 crore. Like this, when you take the average, you can say that it might be 50 lakh or it can be 1 crore also. But in case of a retail customer, if you see, that average thing will be very, very less. It might be less than 5 lakh, or say we can say 10 lakh might be. Maximum might be 10 lakh or less than that. So in such cases, if one corporate account fails, means one corporate account defaults and one account becomes NPA in the bank, so we can say that minimum 50 lakh will be the NPA. But here you can see that it can be less than 10 lakh. It can be 5 lakh or it can be 10 lakh, maximum it can be 10 lakh. So we see that the one account goes wrong, it might be 50 lakh or 1 crore. But in case of retail, it might be as less as 10 lakh or 5 lakh. So here we can say that the risk is very less. In case of retail banking, risk is comparatively less as you compare to the corporate banking. So this is because of the fact that we have very large customer base. So for that reason, risk is spread across the entire customer base. That is the best thing, best positive thing about the retail bank. Second thing is more loyal customers are there. Why? Because how the customer chooses the bank. How the customer chooses a bank. Can anybody answer this by unmuting? What is the reason customer chooses the bank? What is the first three reason you can give me? Three logical reason you can give me when somebody chooses a bank. What is the first reason or second reason, third reason? You can give it in the chat box if it is possible. Okay. Good service. Okay. Good service, reference, locality, service. Okay. To earn interest. See, everybody is earning interest. Interest is not the factor. Trust. Okay. Reputation. Okay. So basically, whatever you tell, that is easy accessible. Yes, that, see, okay, fine. Okay, stop it. Okay, fine, I got it. So I can just give whatever you have given, almost everything is right, except that interest rate or something like that. Somebody's there. Interest rate might not be that much in the thing. First thing, the choosing of the bank by any customer is about the proximity. Proximity means your accessibility or the locality where he stays or wherever his office is. Normally, that is the first thing he chooses. He chooses the bank because he does not know how the branch is giving service. Maybe bank's service factor is very good, but the branch, whether the branch is giving the best of services or he doesn't know. But he chooses the bank. First reason is proximity. Proximity, which is near to. Because at any point of time, if something happens which cannot be solved through this net banking or something, I have to go personally to the bank to resolve my issue. So for that reason, the accessibility or the locality where the customer is staying or where the customer's office is there, normally that is the first reason they choose. And second reason, definitely about the service. So where is the customer service? Because once you choose it, due to proximity you have chosen, but you found that this service of this branch is not good, then definitely that one number will shift to the service. So you will find another branch. And third is definitely your comfort. So your comfort level and your interest in people and how the bank is offering the service. Like nowadays, what is the technology platform? Or we can say how much this virtual model of banking they are offering. That is the, so 1, 2, 3, we can say that these are the basis on which a customer chooses the bank. Okay. And comfortness, definitely it will come after you are acquainted with the bank. So according to that, after you choose the bank, so you stay. Maybe service sometimes might be bad. It is not so bad that you are changing the bank or changing the branch, but normally people stay. 80% people, they stay in one bank where they have opened the account. Changing of the bank will not come into picture unless you are getting some more incentive from that bank. More incentive in the sense, suppose you have opened an account with X bank. Now you have seen that Y bank is offering a deposit rate which is better than X. Then definitely you will talk about that return thing. If a return is offered more, then why should you not divert some of or major part of your deposit to Y? In such cases, you may shift your loyalty. Otherwise, you will be sticking to your one bank. So that's why I told you more loyal customers will be there, because customer loyalty would be very strong unless there is something like this incentivization. Okay, so that means normally most of the customer might not change the branch or bank at all unless it is threatening to them or some other banks are offering some more incentive. Okay, so that is the another reason advantage for them. Third is attractive interest rates. Attractive interest rates, customers are, we can say that there is a fragmentation of customers because there are different types of customers. They are not homogeneous customers. Different types of customers are there. So for those customers, different products are designed by the bank and attractive rate of interest are offered as the competition in the market is there. So customers are too fragmented to bargain to the bank effectively. Means for say, I can say that for a 0.25%, 0.5% till this range, they will not shift their loyalty. They are not going to shift their loyalty for such small rate of interest change. But they can have a bargaining power or they can shift their loyalty if the incentive is offered more than 0.5%. Because most of the retail products, or I can say that most of the retail products, whether deposit or lending products which are offered by the bank, they are interest insensitive. Insensitive means that interest does not change that frequently. Since these interest rates are not changing that frequently, so that is the reason for which the customer do not have that bargaining power for additional interest. So that is the reason that they stay loyal to one of the bank or branches. Okay. Next is smaller ticket size. This smaller ticket size means this is the offering of the product, whether it is asset product, life or liability product, of small quantity. Small quantity means very small quantity of, say, a deposit can, a customer can deposit 5,000 rupees to say 5 crore rupees or 5,000, say 10 or 50 crore rupees also. So as small as possible, 1,000 rupees also can be deposited by customer. He can make a fixed deposit of 1,000 rupees also. You cannot say no, that no, I will not make a fixed deposit of 1,000 rupees. Similarly, a loan can be offered for a small ticket size also. Say 20,000 or 10,000 loan can be also taken by a customer. So loan amount is, or the deposit amount, when they are very small quantity or small amounts, they are called smaller ticket size. Because as loan amounts and ticket size are comparatively smaller, so credit risk, we talk about this risk. So when the loan amount is smaller, our credit risk is also spread totally. So it will be totally less than when you compare it to the corporate bank. Okay. Next thing is about these things, retail banking thing, whether it is asset or liability side, they are less volatile in demand. As far as the demand of such thing, retail products are concerned, they are less volatile, means they do not change drastically within a short period of time. So there is less volatility in the demand, and the credit cycle, when you talk about the credit cycle of the loans we offer in the retail, the credit cycle as well as demand in this retail are very, very less volatile as compared to the corporate loans or corporate deposits. Because corporate deposits, they have a much bargaining power. Any corporate who wants to deposit a bulk deposit, so they want to make a deposit of say 100 crores rupees in your bank. So they will come and they will bargain with you. See how much interest you are going to offer to me. I am making a deposit of 100 crore. So you can say that I will offer 6.5%. They will say other bank is there, they are offering me 6.75. If you are giving this rate, then I'll deposit this 100 crore with you. Otherwise, I'll go to them. Same thing will happen when a loan is taken by the corporate. Corporate will say, I want say 500 crore loan. How much less interest you can give me? because those other banks are giving me at this rate of interest. If you are ready, then I'll come to you. So whenever these corporate customers are there, they have a much more bargaining power. So we can say that corporate customers are much volatile in nature. Whereas the retail side of thing is less volatile, because retail deposits, we when you consider this retail deposit, whether we call it CASA, we see that whenever this CASA is there, the CASA is considered as more stable type of deposit. I can say that CASA deposit, whatever the bank is having, around 70 to 80% of these deposits are always stable. They are not withdrawn frequently. Only 20 to 30% of the deposits are withdrawn by the account holders. So retail deposits are considered as stable, and they can be told that these deposits are stable, as well as we can call that they are very much core in nature. And as far as the cost of deposit is concerned, this CASA are the low cost funds which is available to the bank, because for that reason every bank has a target for achieving this CASA. Your CASA should be more than 35 or 40%. So HDFC Bank is at the top level of having more than 40% of CASA deposits. So low cost fund means it is easier to you that this low cost fund, when you give this fund on loan, then your margin is always a bigger. So low cost fund, your current deposit, you are not paying any interest, but savings deposit, you are paying say 3% interest. Say average comes to, so if you current 0 and 3, so we can say that we total deposit average we can come out with say 1.5% is the interest we are paying on this CASA. Whereas this deposit, when is deployed as a loan, you can earn at least as 10% of interest. So your margin difference of this rate and this rate comes to 8.5%. So margin becomes high. So that's why this stable and core deposit and low cost funds are much more important for the bank. So this is the another important advantage of retail banking. Next is easier marketing process. Since you have a large client base or customer base, so you need not do personal marketing or individual marketing. Your marketing can be easily done through mass marketing. Mass marketing means you can do it through different type of marketing, like you advertise in the say billboards, the hoardings, or you advertise in the TV commercials, or you advertise through social media. So these are the advertising, these commercials which are done through social media, TV and newspaper, etc. They can reach to each individual. So that type of marketing is called mass marketing, where the corporate banking cannot be done through mass marketing. You have to go to individual customer, corporate customer, to canvas the loan or deposit what is going. So this large client base basically facilitates marketing, which is mass marketing, or we can call it mass selling also. And there is scope of classifying the clients using a scoring system also. Scoring system can be used. So how much scoring system for individual customer can be given, so that you can classify the customer into different category. Say A, B, C, D, E, F, like that. You can categorize all the customer into different category. So A may be the top class and F might be lowest class. So according to income, according to age, according to the type of business they are doing, what type of job doing. So different types of scoring can be given to the customer, and you can create the mass marketing concept for all these type of customers. So that is another advantage in retail banking. Next is possibility of data mining. So data mining can be done easily because we have a very large customer base. So we have a very large database. customers, every customer's data is there. So we have a very large database. So data mining is what? Data mining is that a process. Data mining is a process where the entire large database which somebody is having, it can be analyzed. So when you analyze this large database in order to generate new information or new strategies you can apply or new marketing technique you can apply. So through the use of this large database, you can analyze the database and find the pattern, and for that pattern you can get the new information. You can strategize new things, how to approach the customer base, and also different types of other products can be made for such things. So that process is called data mining. So data mining is basically the thing which is possible through the retail banking, because we have very large client base and we have the database for entire large client base. So these are the advantages of retail banking, for which retail banking has proved to be a profitable thing for the bank. Okay, now we'll see the what are the disadvantages. Because advantages are there, definitely disadvantages will also be there. So disadvantages also they are always there. So those has to be seen. So basically we can see whenever we are doing any type of business, we always see what are the pros and what are the cons. So pros are the advantage, cons are the disadvantage. And we'll see that whenever these pros are greater than cons, then we can see that yes, this is fine for me, because whatever the cons are there, it's lesser than pros. So that whatever the disadvantages are there, when it is they are less, then we can say that we can go ahead with this business. So what are the disadvantages? Main disadvantage in retail banking. So first thing is client handling. As I told you, we have a very large client base, minimum 1 crore, 2 crore, 5 crore, or State Bank of India having more than 20 crores of customers. So there might be a problem handling that much of a large client base, large number of clients, because client handling in this type of age is much more crucial and important. Because if you do not give the quality service to a customer, he has immediately another shop is there, he will go there and he will be the customer of that. So if the service quality is not up to standard, more complaints will be there. And more complaints, if it is there, then you have to resolve those complaints. And resolving of complaints or grievances has to be always faster, because within maximum 48 hours, if the customer's grievances are not handled, then there is a chance that 99% chance that client will go to some other platform, some other bank. So it also damages the reputation. So customer complaints, as I told you, 20%, as far as customers are, 20% of the customers do not complain. You know, they do not complain at all unless they are harassed so severely. For small disputes things, 20% of the customer, they do not complain at all to the bank. And such customers are very, very dangerous customers, because they will only complain when there is a financial loss to them. Unless there is a financial loss, they are not going to complain to the bank. And such customers are very dangerous, because these customers have an intention of shifting their loyalty immediately, because they can shift to another bank. And that's why study says that such type of customer have an intention of a repurchase rate of 9% only. Means this type of customer can go to the same bank to make a new thing or make transaction only 9%. So 91% of these people will not make any business with the bank. But other side is 80% of the customers complain to the bank whether they have suffered finance loss or not, they will complain. They will complain. They will always complain, whether there is a financial loss or not. Only service deficiency, they will definitely complain. Out of this segment of 80%, who do not bother about the outcome of their complaints, may have their repurchasing rate is 19% only. It means only 19% of these people may do transactions with the bank. So rest amount 81% are not going to do business with the bank. So customers whose complaints are heard by the bank within 48 hours of their complaint, and when this is resolved, their repurchase rate is said to be 54%. Means they are going to stay with the bank, make transaction with the bank, make deposit, take loan of the bank, which increases to 54%. So the main thing is, whenever handling customer, if complaints are there, this has to be resolved, and that too with a timeline of 48 hours. If it is resolved, then those type of people who have complained, they are possibility that 50% people are going to stay with you. And if their complaint is resolved within 48 hours, this repurchase rate, as per the statistics research, this increases to 82%. That means you have resolved their complaint, so 82% of those people will be with you. So customer handling is really a big problem. So large client base is there. So how to handle this? So only thing is that handling of the customer is, first thing is that you should have the modern technology. Current technology has to be there. Secondly, your customer complaint say we can say redressal system should be efficient enough so that customers are not going to go away. So that is one of the most dangerous disadvantage of retail banking. Second is a rapid evolution of products, because bank has to go on creating and designing new product almost every day, because the need of the customers are changing every day. Every day customers need changes, because entire thing is changing, economy is changing in that way, so customers needs change very frequently. So rapid evolution of products are done by the bank. You see, every 15 days or 1 month, your bank is launching a new product. So in your shelves, there are so many retail products are there. So this rapid evolution of product is not possible unless you have, again, technology and your expertise in the marketing area. So particularly when the bank do not adapt to such a robust and modern technology and contemporary system, it is not possible to handle the clients, nor it is possible to design and sell new products to the customers. Next is about the cost of business may spike. So both the things, all the things when we do, there is a cost factor is there always. So cost of maintaining the large base customer with numbers of branch network may become high. Solution is that technology, but how much technology you can give? Because you should distribute your products to the customer, so you can think of the cheaper distribution channels like ATMs or net banking or mobile banking. So they should be totally up to date. And another factor in technology comes, customer trust should not be broken, because nowadays you see this cyber security thing is playing a major setback in the retail banking. So you should have a robust technology. So every time you have to invest something, you have to spend money. And for cyber security, every other day something will come, some hackers will come, some malware comes, some virus might come. So you have to spend a lot of money on that. So cost of business definitely is to be going up when such cases are retail banking having large customer base and you are investing money in technology. Next is about high delinquencies. Delinquencies is about the, normally we are talking about the loan when loan becomes NPA. So those are called the defaults. So NPA means your recovery is not happening. So whenever such thing happens, those are called delinquencies. So high delinquencies are also found in retail banking. Only two products are there where such high delinquencies are there. One is your credit card. Credit card defaults are more. Second is your personal loan category or consumer loan you provide. Personal loan and consumer provide. So these two categories of loans we give to the people, that is a spike in NPA in these two categories. So that is also a loss that may be lost to the bank also. And definitely last, I can say that from this, I can say that any loss in the faith in particular bank due to any of these things, due to client handling or complaint, or no products are there, no services are there, or high delinquency is there. So that would be a scenario where the faith in the customer or the trust in customer might be broken. So basically, when the trust and faith is broken, then there you may see that lot of outflow of retail products from the bank. People will be taking your deposit. People will not coming to buy your loan products. So when such thing is that, normally the entire profits of the bank will fall, and it can be result into collapse of the bank also. There might be a collapse of the bank. So which is called, normally when a sudden collapse of the bank due to such factor is called happening, so that is called bank run. That is called bank run. Bank run means due to some thing where the bank loses the trust of the customer and faith of the customer, which may lead to the outflow of all the retail products. And definitely bank immediately loses its profit, etc., and come into loss. And there might, the bank, if it is a small bank, that bank might also collapse. In such cases, that term which is used, it is a bank run case. Okay, sometimes question comes, what is a bank run? So bank run happens when due to loss of faith and trust of the customer in the bank, where there will be a sudden outflow of retail deposits or retail loans will not be purchased by them. That might result in the collapse of the bank, which is called bank run. So these are the disadvantages and advantages we have discussed. So we can assess that whether advantages are more than disadvantages for any bank. Yes, it is. For that reason, every bank in our country are doing this retail business very efficiently, and they are earning a lot of profit from the retail business. Okay, now we'll see that how this retail banking came into India, because as I told you, prior to 2000 it was not there. So how it has come? Bank run. Okay, somebody is asking what is bank run. Bank run is a term which is used normally whenever the trust and faith of the customer. So trust and faith of customer on a particular bank is lost. Is lost due to any reason. It might be due to rumor also. It can be due to rumor also. When the large customers, they lose their trust or they lose their faith on any bank, so automatically what happens? Entire customers, more than 80% of customers, they withdraw their deposits. So there will be a outflow of deposits, outflow of the retail deposits from the bank. So whenever entire deposits are withdrawn or 80% deposit of the banks are withdrawn, means your funds are totally gone. Now you have given so much loan, you have a liquidity crisis immediately. liquidity crisis happen. So liquidity crisis happen, and due to that, some people will never come to you to buy your retail lending products also. So ultimately, what will happen? When liquidity crisis is there, you cannot borrow money from the market. So your bank may lead to a collapse. So when such thing happens, that is called a bank run. Okay, so that is called bank run. Sometimes questions are asked, what is the definition of bank run? So you can say due to the when the customers, large number of customers lose faith and trust on the bank, will be an outflow of retail deposits, which might lead to liquidity crisis, and that might lead to the collapse of the bank. That thing is called bank run. Okay. Now we'll see that evolution, how this retail banking has grown in India. Okay, so I can say that when you look into the, I'm not going beyond 1960, from 1960 to 1990, if we take that period, this time in India, primarily the lending thing, bank lending, when this loan of the banks were concerned, this lending of banks were totally towards the business community only. It was for the business purpose only, means either small business or corporate clients for their working capital or any of the, say, we can say project financing, or you can say asset, say their fixed asset financing, term loans were given, CCOD were given, or anything given. So basically all the loans were given for business purpose. So we can say that during that period, as far as the asset side of retail banking is concerned, it was totally a class banking. It was never a mass banking. So class banking means to only this business class, the lending was provided, because there was no demand at all for the individual customer for any kind of loan. There was no vehicle loan, no housing loan, nothing. No loan was given to anybody. Only one thing which came into the asset side during 1980s, early 80s, one thing was introduced in the asset side, which is credit card only. Credit card was given to the individual customers. That too, only the foreign banks started it, and some of the private banks were there, they were offering, and some of the major nationalized banks were there offering. Other than that, nobody was offering. So we can say that entire lending operation of the bank was focused on class banking. That time, no retail banking was there, because needs and wants of business and corporate clients were very straight and simple. Because they wanted to do business, they want fund, they would go to the bank, they would take loans. That's all. Individual customers, there is no demand, nothing, so bank will offer nothing. But over a period of time, what happened after this 1990? Why this 1990? Because after this 1990 period, basically you can say that 1990 and 1992, this is the period when this entire financial sector reform happened in India. So this financial sector reform was introduced in the early 90s. So after this financial sector reform happened, all new things and new concept of banking was introduced. And the entire economy also changed drastically. So there was a growth of the economy during that period. So that time LPG structure was liberalization, privatization, and globalization. This concept was introduced. So since this economy was developed, so what happened, more and more people in job sector or any other sector, their need and their want of customer gradually expanded. Gradually their need and wants expanded. So the need for more and more product from the bank, more services of the bank were felt by individual customer. And banks started falling short of the customer expectation, which rose very considerably during this period, 1992 to say, I can say up to 1998, 99. So during this period only, bank realized the retail business model and redesigned their product and services under this retail segment. So from the vanilla, so we can say that from the plain vanilla commercial function, which was class banking was done, banks started or initiated investment banking, merchant banking function. And now the demands are of asserted flavors from the customer. Because customer want asserted flavors, means everything should be there in the basket. Assorted ice cream, we order assorted ice cream, not one type of ice cream. 4 or 5 flavors of ice cream will be there so that we can taste each and every one. So like this, customers' expectation are now, or customers' demand are now of assorted flavors. So as I told you, post 1990s, only this credit cards, it was introduced by Citibank, which came in 1980. They have introduced this credit card concept in India. After that, other banks like Bank of Baroda, Central Bank of India, then State Bank of India, they came into this credit card. And gradually, what happened? Foreign banks, they are the pioneer of introducing such product to Indian customers. They, after the credit card which was introduced, these foreign banks, they also started issuing personal loans to the customers, their customers. So when this credit card and personal loans were started by foreign banks, when the demand was increasing, they are earning a lot of money. So all other banks also fall in line and they also started offering this type of product in the retail segment. So various private sector bank, various nationalized bank, they also started this. So all these things happened gradually. Okay. So we can say that the character of customers based entire customer, the character of customer base changed from, we can say earlier period, this pre-90s period, the character of individual customers were homogeneous in nature. Homogeneous, totally homogeneous. It was not volatile at all. Now it has become totally heterogeneous, totally volatile. You do not know when it's going to change. When new customer comes, new person is coming, becoming a customer, and you say of a very lower age, his needs are very, very fragmented, very, very heterogeneous in nature. So according to this heterogeneity of the customer, banks are required to reposition themselves, repositioning themselves, and bank has to reposition themselves and were under compulsion to redesign their product and services model to cater to this type of customer so that their demand can be fulfilled. So these are the evolution, how it is going, and it is not going to stop here. It is continuously for the next so many years. The change and the evolution of retail banking has to be there in a continuous procedure. A bank has to cope with this, and bank has to fulfill the various varied needs of the customer so that the retail banking will be the main banking thing and main earning exposure of the bank or earning portfolio of the bank. Okay. So now we can see that what is the scenario in India as far as retail banking is concerned. So basically, I can say that the asset side. Okay, anybody, any question is there? Plain vanilla. Okay, plain vanilla means it is a term. Say, if you know about vanilla ice cream, vanilla is a flavor. Vanilla is a flavor which is totally a simple flavor. Simple flavor. Vanilla flavor is called simple flavor. The most common flavor is called vanilla. So when this term vanilla flavor is used for anything, that means the approach is very simple approach. This is the base or foundation approach or most simple approach of anything. You can use this phrase vanilla for a vanilla flavor for anything. So bank product and services were vanilla flavor means it was simple, means only it was for class banking. Lending, when I am talking about lending of bank, loan of the loan portfolio of bank, it was vanilla flavor, means only class banking. Only banks were giving loan to business people only. Other than that, nothing. Now it has come to retail banking, means that is called assorted flavor. Assorted flavor means with vanilla. When you order ice cream, assorted flavor means vanilla. You want choco, you want some pista, you want so many flavors are there. So when such more than one flavors are ordered, they are called assorted flavor. So you have different types of flavors within you. So that is what the apart from class banking, now mass banking is there, where there are different types customers base are there and their demand is totally different. So that demand is called assorted flavor. It is not simply vanilla flavor. I hope you understood this phrase. Okay. As I told you, as far as the retail banking in the asset side is concerned, this is triggered in India due to the entry of foreign banks only, because they were the pioneer in introducing the credit cards as well as personal loan. After that only our Indian banks, they fall in line. They also introduce credit card as well as personal loan. Citibank introduced this credit card. Then personal loan segment was introduced by Standard Chartered Bank, and Grindlass Bank was there also. Now they both together, Grindlass and Standard Chartered Bank almost merged together. Only one bank is the Standard Chartered Bank now. Okay, so Citibank actually created waves in India in the 1980s with the credit card product. Then the public sector bank like Central Bank of India, Bank of Baroda, State Bank of India, Indian Overseas Bank, Andhra Bank gradually entered into the credit card market. They saw that people are flocking to Citibank. So why we cannot offer them? So they also enter into that. So entry of new private sector bank, then after this foreign banks, this credit cards, then came this banks. After this 1990 this financial sector reform, suddenly there was a surge of private sector bank. Now you are seeing ICICI Bank, HDFC Bank. During that period, they have emerged. So entry of new private sector bank in India has initiated this new approach of retail banking in India. Because these private sector banks, they generally or mostly they followed the footsteps of the foreign banks. So when they are doing the good business, private sector and foreign banks, so the public sector bank and other banks which are there in India, they also thought that yes, we have to also do this business, otherwise we will lose the profit which are taken by this private sector and foreign bank. So this is what the basically depends. And we can see that what are the factors which led to retail banking growth in India. We can say that economic growth is the most important factor. Economic growth as well as the technology which has come. Because technology again within, after that period, after 2000 only, this technology concept come into the bank. Earlier, everything was manually done. Then partial banking then the CBS came. So during 2004 and 5 and that time only this stabilization of CBS was happened. So with the introduction of technology, the banks in India started redefining their business models for retail banking, which is supported by strong economical growth in India. Because financial reform has happened, and this financial reform has accelerated this retail banking sector to grow multifold up to this level. So we can say that retail banking growth is directly proportional to economic growth of any country. Wherever the economic growth is increasing, retail banking is also increasing proportionally. So financial reform and economic growth are almost contemporary, same time it is happening. Because of financial reform, economic growth happened, and technology was the another factor which came into help for this thing. Then there is another factor which can be also attributed to retail banking growth, that is called growth in urban population. Growth in the urban population, not only that urban population automatically grew, but due to job, etc., which is available in the urban and metro area, the rural people started migrating to this urban populated area or metro area. So when they are coming to that urban area or metro area, means they are doing some kind of job or some kind of business. So whenever such job thing is come, income level of the people are also increasing. Standard of living of the people are increasing. So they have a higher disposable income. So they possess a higher disposable income. Whenever such higher disposable income is there, that means some part of the income is there where they can place that surplus money in the bank, as well as they want to, because their standard of living is also becoming high, so they want certain things from the immediately. Some assets are required. So a person who is getting a job, he wants to marry within a period of 2 years. So to get married, to set his family, he will definitely need a TV, fridge, and other gadget also. For that, immediately he might not have money, so he will go to the bank to get a loan also. So this is possible because of that thing. Younger age people started earning more. This is another factor. IT sector development, IT sector growth was quite humongous during that period. Now it has stabilized a bit, but during that period, 2000 to 2012, 13, or say we can say till 2015, the IT sector was growing like anything. There was explosion in this IT service industries. So basically, this IT sector, most of the people who joined the sector, they were younger age people. So we can say that now also we see that the up to age of 30 years who are earning, say 20 to 30 year bracket, the younger population is highest in India. So there was explosion of service economy in India during that period, and now also it is there. So rise in the mass affluent space in India happened. Because at that time, bank wanted to sell their products, so they started offering easy and affordable product to the people. So easy and affordable access to the banking products have also helped rising in the growth of retail banking. Then total automation happened. CBS, everything happened. Now technology is the only thing. Without technology, it is not possible. And there is a changing demography of the customer base. Demography in the sense about the age, sex, and income. So more and more people, male or female, both are entering into the job career. So age, sex, and income. So this is changing totally. And due to the competition in the entire market, so many new banks have opened, so many banks are there. So competition has in the banking market has increased so much that you now see there is a declining interest rate scenario. Because every bank is entering. Now you see the housing rate, housing loan. Housing loan, now SBI is offering the lowest rate. So you cannot offer, suppose SBI is offering at 6.5% of housing loan. If your bank is offering 8%, who will come to you to buy your housing loan? So for that reason, you have to at least, you cannot charge 6.5 because you are not SBI. You can say that I can charge 6.75 or 6.70. Unless you do that, no customer will be coming to you. So because of that competition, the interest rate in the lending of retail products has come down. And accordingly, the change of terms and condition for the loan has also come. So all these factors, what I have told you, these factors have made a retail banking an important component in the business designing of the bank in India. And I can say now the contribution of retail banking to GDP in India, it is around 7%. Currently, it is 7%, where in 2005, contribution of retail banking to the Indian GDP was 8%. It has slightly declined, which is comparatively very lower than other Asian countries. If we compare the contribution of retail banking to GDP with other countries, our 7% rate is very low, because we can say that we are competitive with China. China is a very big country, and their contribution of retail banking to their GDP is 15%, whereas our is only 7%. So there is a scope still, that 8% gap is there, because we can compare with China. So there is a enormous scope in the growth of retail banking, where we can say that we can achieve 12 to 13% of contribution of retail banking to our GDP. It is possible. If you go to South Korea, the contribution of retail banking to GDP is around, say, 55%. For Malaysia, it is 33%. For Thailand, 18%. For Taiwan, it is 52%. Although they are very small countries, they are not as big as India. So we can only compare with China. So the overall retail market, the researchers say that overall retail market in India is growing or expected to grow at least 12% per annum. As per the recent survey, it is still going to grow at least by 12% or more than that for the next 5 to 10 years. So there is enough scope of retail banking in India. Okay. Now we'll see some of the statistics which are available. So India has occupied a very remarkable position in the global retail ranking as far as the retail banking is concerned. India's net retail sales are quite significant among emerging and developed nations. So India is ranked third after China and Brazil. As far as the retail banking is concerned, we are at number 3 position after China. China is the number 1, Brazil the second, India is third. Foreign investors are now more interested in investing in India for this purpose only. So India has experienced, we can say they experienced a very spike or surge in retail banking after introducing this financial reform in 1992. The retail banking industry in India has fast emerged as one of the major contributors to the overall growth of the banking sector in India in the recent 10 years, if we take into consideration. Our country has high market potential, low economic risk. So we have high economic potential, very low economic risk. So I can say the high economic potential and high market potential also, very low economic risk and moderate political risk. So these are the factors which actually has led that India has occupied a remarkable position in the retail market. Overall, given its high growth potential, India compares very favorably with the global peers among the foreign investors also. As for the percentage growth, of retail segment we consider. So during the 5 year of 2017 to 2021, if you go by the percentage growth, as per the RBI report, it is retail banking has grown by 9.55% at compounded growth rate. CAGR is 9.5%. So from the growth in retail loans from 2019 to 2020, 2019-20 to 2021. If you see the growth is 12.4%, which was predicted by the economics that India's retail will be growing more than 12%. And if you consider up to September 22, if you take into consider the current figure, the growth is around 14%. So it is becoming more. And here we can say that which are the types of loan which are remarkably having the top ranking in retail. So I can say for your information, housing loan. In India, housing loan in retail category, housing loan is at the top. So its contribution is 31%. If 100 rupees is total retail loan, 31 rupees is under housing loan. Personal loan next loan is around 8%. Then comes your vehicle loans, automobile loan or vehicle loans to the retail segment. It is 6.4%. Then comes your credit card. Credit card is 2.3%. Then comes your consumer loan. Consumer loan at 0.6%. So these are the share of retail banking. So housing loan is about 31%. Okay. What is your question? What is a CA? The compounded average growth rate. Compounded CAGR, you can search in Google, Baba. CAGR you do not know. CAGR is compound average growth rate. It is compounded average growth rate per year. It is not simple rate, it's compounded. So these are the share of housing loans. So share of retail loans, housing loan at the top. Then comes personal loan, then comes vehicle loan, then comes credit card, then comes consumer loan. So we can say that if you take into account what is the percentage share of retail loans to total loans given by banks, to the total loan. So what is the percentage of total loan of all the banks and what is that percentage of retail? If you take into figure, so in 2017, the percentage of retail loan to total loan was 19.17%. It was around 20%. And now, if you take the figure of 2020-21, it has grown to 28.92%. Means total loan given 100 rupees in 2017, 20 rupees was given for retail. Now it has increased to almost 29 rupees. Out of total loan of 100 rupees, 29 rupees is given for retail customer. So these are the different statistics. I can show you some of the graphics so that it is easier to understand. This is what the latest information as per the RBI's Reserve Bank's trend in banking. I have taken the data from there. So these are the different things, how much it has increased. So retail loans increased by 12.4%, as I told you already. In amount also it is given 212 crores has increased. Number of credit cards, how many credit cards issued in this year? What is the increase? 7% increase. Debit cards, 8.4% increase. Number of ATMs, very insignificant because people are now not using cash. It means that cash is not so much popularly used by people. Rather, they are shifting to the digital mode. That's why number of ATMs growth is decreased now. NEFT volume, how many NEFT transactions happening? So it is increased by 12%. Now UPI, see the UPI transaction, the growth is increased by 78% from 1920 to 2021. NEFT amount also, and UPI amount growth is 92.5%. So these are the results of this retail banking and technology which is happening. So these are the maybe say data might be say this all the data. So you remember this thing. So it can be asked, what is the growth of retail loans? Because this is the latest, because 2022 will come in the March 2023 only. So recent is this data only. So you can remember this 12.40. This might be useful. Sometimes some question might come. So you can see that what is the impact of which digital banking, which is the most grown thing. So you can say that UPI transactions are much more than the NEFT or RTGS transactions. Okay, so only remember this 12.4. This is for your just knowledge sake, that you can see, you can visualize how retail bank is running. Why retail, since this growth is there, that means it is the bank who can see the potential, and they can grow their retail banking portfolio accordingly to increase their income. Okay, so today we will end with this introduction part of retail banking. Again, we'll continue tomorrow. So you can, I am unmuting your mics so that any question is there, you can unmute and ask me now. Any question you can ask me. I'll wait for 1 more minute. If there is no question, then we'll say good night. Currently, percentage of share of retail loan to total loan is 29%, 28.92%. Mic not aligned. Okay, just I'll say, I'll do it again. 1 minute, 1 minute. Now you see?
Yes, sir. Now allowed.
Okay.
Yes, sir. Any numerical question?
Numerical question will be discussed. I will discuss on 19th only. Numerical questions will be on depreciation, on say credit card, on housing loan, on reverse mortgage, on so many things are there. Those things will be discussed on the last day. I will not be discussing those things in theoretical classes. Only on 19 we'll do those around say 20-30 questions I will discuss. So most of the questions we are coming, those things will be discussed on 19th.
Yes, okay, thank you.
Sir, in this introduction, what type of questions can we expect, sir, for reviewing purpose?
What is retail banking? Retail banking is primarily geared towards what? For what it is there. So in the first slide I have shown you what are the different advantages, which is not an advantage of retail banking, so option will be given. Which is not a disadvantage in the retail banking, so option will be given. You will see that which are the advantages or disadvantages, which is not an advantage or disadvantage. So many questions might be coming.
Okay, sir. Okay, sir.
Okay, so everything, whatever I have told you, if it is in your mind, any type of question comes, you can easily answer those. So many questions might around say 9 or 10 slides I've shown you. From that, 20 questions can be made. 20 to 25 questions can be prepared from this slide. Okay, so if you have focused clearly, then you can easily, you don't have to study it again. Okay, because it is there. Retail banking is such thing. You can answer.
Sir, these PPTs will be shared, sir?
Yeah, it will be shared. After the sessions are over, I will share it. On 19th, it will be over. So on 20th, I will be sharing this PPT.
Okay, thank you, sir.
This PPT is enough for exam point of view, sir.
Pardon?
This PPT is enough for exam point of view, sir.
That who will guarantee? Exam is exams are announced every 6 months. Now, if you prepare during the month of exam, then how it is possible? You should study now. you should study book also. Only PPT is not enough. PPT are helpful. They are like, see, they will be adding something, so brief, so you can just view that or review those things through PPT, or point wise you can go and read. But reading of the book or study material is much more important than only going through this PPT. PPTs are taken from the book only. Only this is very summarized, only headlines. It is like a headlines in the news coming. But details are given in the book and study material. If you read those things, your concept will be totally clear. And you can score more than 70 marks. The participant have scored 78, 76 in retail banking, you know. It is very easier to score more than 60. So last time somebody has scored 78. The highest score was 78. So it is not. So you listen to the lecture, you read whatever today I have told you. If you read tonight, half an hour or 45 minutes maximum is required. Just read this first some chapter which I have taken sequentially. I am going. You read that. Second time, no revision is required. Because
Sir, we should read from the study material, no?
That is also, I think study material is now updated. So it is better because retail banking book was 2 years old, something
Yes,
like
sir.
that. So
Yes,
better
sir.
to read the study material, that will be helpful. Because certain
Sir,
new
Thank
things
you,
have
sir.
been included.
Sir, what is FPII?
What is?
FPII.
Where it is written?
In the first chapter, sir.
What is that? I can't hear. What is F?
Faster Payment Innovation Index.
Also, faster payment. So that is it. This is not going to come to your. So that, because this is according to the global scenario, there is an index for the growth of this retail banking concept depends on this index. Like different types of financial index, this is one of the index. So this is not going to be asked in your question. This is a global parameter. No, it is not so much popularly used in India. So don't worry about the FPPA. Anything else?
Thank you, sir.
Okay, sir. Thank you.
Thank you, sir. Oh, nice class.
Thank you, sir.
So saying nice is not enough. You have to study.
Yes,
Okay?
sir.
You have
Yes,
to
sir.
study
Yes, we
only.
will do,
Yes, sir.
sir.
Yes, sir.
So,
We will do, sir. Thank you, sir.
saying nice will not bring you marks in the examination. So better study and show in the examination. That time you tell in the group that, sir, I have scored 74, 75, 78, 68, like that. Then we will be happy in the IBS. Okay. IBS will be
Surely,
happy for
sir.
that. Faculty will be
Okay,
happy.
sir.
Okay. Don't say that nice class doesn't help anything. You should be showing your result. So your result will be happiest people in this. Okay.
Definitely, sir.
Okay. See you tomorrow. Good night.
Good night, sir.
Good night, sir.
Good night, sir. Good night, sir.
Good night, sir.